Hey guys, hope you all had a nice weekend. This is a very short run through of the important markets for next week from Muffet Investments. Today we will be covering DXY, Nasdaq, crude oil, gold and AUD versus USD. As always, we do this analysis in good faith and we want our viewers to benefit from our analysis. But we are not financial advisors and these are our own personal views and not investment advice. DXY. The weekly chart is showing a long period of consolidation and the price has bounced off the bottom of the consolidation. The US dollar has benefited from escalation in geopolitical tensions and we think that it will be bid until some form of a peace deal could be achieved. The current daily and 4-hour chart is bullish and so we hold a bullish bias. If we look at the daily chart, the price has moved up with hardly any pullback. The last swing low is at around 102.30. So as long as the price is above this, we continue to look for longs on pullback. We have already determined the possible target to be the FVG zone at 103.60 to 104. Let's look at the 4-hour chart. If the price breaks below 102.30, then the 50% Fibonacci retracement is at around 101.50. Price is likely to find support here on any retracement. Nasdaq. The price has closed above the weekly FVG. And so the price is bullish. From a technical standpoint then, the price has a good chance of making all-time highs. But we should also take into account the risks involved in US elections and any escalation in tensions in the Middle East. For this reason, we will be cautiously bullish on Nasdaq. We will look for longs targeting all-time highs, provided the price does not retrace too much and price does not go below 20200. If we look at the 4-hour chart, there is a clear pool of stop-loss orders below the line shown which could become potential targets if the price closes below the zone we have market. Crude oil. If you have been following us, we were bearish on crude oil because of rising supply and falling demand. However, in the long term, we are still bullish on crude oil as the economic growth and higher standards of living in Asia and Africa will more than offset the reduced demand in G7 countries. We have a long position in crude which is a hedge for the portfolio on a scenario where Israel bombs Iranian oil facilities. If this were to happen, the minimum objective is the weekly FVG at around $80. The price is reflecting a higher risk premium on a possibility of this scenario happening. For this reason, unless we have this scenario happen, price will be in a range. This is just our view. On the 4-hour chart, we have a FVG above which will act as resistance and we have drawn FVG below which will act as support. AUD versus USD. This forex pair caught our attention last week. The price is showing relative strength compared to Audusd. If we look at the weekly chart, although we can say that the market is in consolidation, we can also see a bullish pattern. The price took out an old low and then price took out a swing high. If we look at the daily chart, we have had a deep retracement of the previous bullish wave, but a swing low has formed. So as long as the daily swing low is not violated, we can look for longs. If the daily swing low is violated, then I think price will go back to the bottom of the weekly range in the weekly. The 1-hour chart shows consolidation and price has left the consolidation. But sometimes price makes a false move to the top to trap traders taking long and go back to the lows of the consolidation. That's why we should have a defined area where we say that the price is no longer bullish. Finally, we like the Salesforce technical pattern. The price is starting to show relative strength and we will be looking for an entry on this stock. Last week we covered Uber and before we could enter the price had rallied more than 10%. So we will be doing a video on how to use options to have exposure to Uber, which might be a better option than buying Uber stock at current levels. We hope you like this video and if you think that we have provided value, please like and subscribe.